This is the Dogecoin 1 month overview reading for the month of February 2024. It's currently December 27th, 2023, 8:26 p.m. Eastern Time. Dogecoin at the time of this reading is currently 0.09390 or just over 9 cents USD. The shuffle video for the February reading was created on December 5th, 2023 at 3:54 p.m. Eastern Time. That's this video here in the corner. The overall theme of behavior for Dogecoin in February is the completion of a rally mixed with a sharp decline through multiple support levels. Behavior around the highest high for the month. We have a period of sideways rotation and then a big move higher followed by sideways rotation establishing support at a higher price level around the high, and then behavior around the low. We should see a prominent move higher on a multi-day scale out of the low followed by a full retracement of that move back down. So probably when you see the lover's card, a lot of the time you see the low twice or the peak in between. So before we go any further, I want to make sure everybody's aware the whole purpose of the channel is to transmute some of the competitive energy of the stock market into goodwill. We do that by following through on the rule of karma for the channel, which is the unwritten agreement between the universe and anybody utilizing this information for personal gain. The rule of karma, you do so here on the resources tab of our website, Tarot for Traders, where 5% of all profits should be donated forward to one of these charities. 5% of all profits should be donated back to the channel. It leaves you with 90% of the money. Make sure to spend that money out of love. As long as you follow those rules, you're an angel investor. The channel, the universe, going to send it back to you tenfold for following through on that rule. Blessings to all my angel investors. Let's get back into it. When reading a 1 month SO meta analysis reading, it's important to understand that you want to pay attention to the sequence of events over anything else. So that most of the time, the timing is like right on point as far as like day to day to day, right? But there will be cases where there's so much going on in the chart that it becomes plus or minus a day of wiggle room. Not each card's energy will line up perfectly with 1 day of chart, even though each card is representing 1 day. So that's where the plus or minus 1 day of wiggle room will come into play. When that happens, if it does happen, just pay attention to the sequence of chart events as predicted, because it'll remain on track even when we're off a little bit on timing. On the first, we have our first lowest low here on the first. It's going to act as our lowest low thus far. There's a sharp decline through multiple support levels into a prominent trough. U-shaped dip on the second, so a peak with a dip in between and then another peak. Looks like an important trough midday on the third on a 1 month scale, and a big move out of that trough to a peak towards the end of the day on the third. On the fourth, we have a prominent move higher followed by a full retracement of that move back down. And it's a move higher through resistance. We stay above it briefly before breaking back down through that same price level with a full retracement. On the fifth, we're in a prominent trough again, and there's a resistance level that's highlighted on the fifth that we failed to break through many times before. On the sixth, we're doing 3 crisscrosses back and forth through the same price level, confirming a bullish trend on the third cross to the upside. And that rally takes us into the seventh, where we have that rally either takes us into a peak at the end of the day on the sixth or continues into a peak on the seventh, one of the two. But from that peak, either way, there's a sharp decline that'll stand out on a multi-day scale there on the seventh. That decline continues into the eighth, where we have a big move from the bottom of the range to the top of a range, taking us back into a high or a higher high on the ninth, where we have a prominent move higher. We stay above resistance level briefly, and then we break back down through that same price level shortly thereafter. The decline off of the high on the ninth into the 10th offers trade opportunity. I'll talk about in more detail in the paid version, as well as a trade opportunity on the ninth or on the 8th. There's a peak at the end, like the cusp of the 10th, 11th, and a notable fake out, shake out of some kind on the 11th, some sort of really tricky chart behavior it's intended to make us do the wrong type of thing. It looks like it's a sharp decline there. But back to that same, like roughly the same price level of the peak on the 10th we see again around the 12th. And there's a notable reversal. We have a peak and a trough on the 12th, and then a breakout on the multi-day scale there on the 13th. Trade opportunity on the 12th, 13th, 14th, and 15th. I'm going to talk about in more detail in the paid version. On that rally on the 13th is halted by a sharp decline through key support, taking us into another trough on the 14th, and then a big rally out of that trough into a unicursal hexagram kind of peak on the 15th, maybe on the cusp of the 15th, 16th actually. Before we go any further, let's take a look at December and see how we're doing thus far. So we had a highest high on the 7th. Looks like we missed it by day. It was on the 6th. We had a lowest low on the 5th, 6th, and we were close, pretty close. We kind of almost touched it. We had the lowest low within close time proximity to the highest high. Nailed that pretty well. And then there's another highest high on the 11th. Looks like we have a prominent peak on the 10th, 11th. We didn't catch it as highest high. We saw another highest high on the 13th, 14th, which we had another peak there, so we kind of got those two reversed. And then we had a pretty significant low on the 21st, 22nd. It's here on the 18th, followed by another one around the 25th, 26th. Pretty close to lowest lows. They didn't come in quite at lowest lows, but very, very close to the same price level as this area over here. So I'd say pretty close to really accurate. It's not my best reading, but definitely not my worst. Pretty solid information. So there was a day trade there on the 5th, open up a short and close a short, open up a long on the 5th, on the 6th, and close that long on the 7th. Actually 7th, 8th I would have had it, and that would have made some pretty good gains. Well, another difficult reading, when you get into these price levels where it's like just a few cents, it's not even like $1, and there's a lot of volatility, it becomes very difficult to get it right on point, but this is still a pretty solid reading. If you're interested in the paid version, guys, the way that you get the paid version, really great way to support the channel, go to our services, ASO Meta Posts, scroll down to your monthly subscription, click here to order. Click on Dogecoin to subscribe. If you're interested in any of these other tickers or crypto as well, I highly recommend getting the 30 days access to all paid, because it gives you the paid version of all of these, plus the paid version of Amazon, Google, and Nvidia, which you can only get through through this all paid version. Most popular way to support the channel, and we're averaging a roughly 98% average accuracy. The Dogecoin is a pretty difficult one for us to get like hit it right on the day as far as the highs and the lows. But when you think about when we did this Dogecoin reading, the December Dogecoin reading was created October 8th, 2023 at 10:18 p.m. Eastern time. October 8th, guys. That's October, November, then December. We're averaging roughly a 98% average accuracy, and even when we're wrong about one little bit, we've never seen a reading where we were wrong on most of it. All of our readings are mostly accurate. Most of them are 100% accurate, but we average about a 98%. So you do the math, pretty valuable information there. Let's get back into it. There's a big move to the upside on the cusp of the 15th, 16th, taking us to a peak. And there's bumping along resistance sideways around the 16th, a sideways fluctuating rally on the 17th that precedes a decline. Looks like it's a sideways fluctuating rally probably into a peak on the 18th. It's either that or there's a decline at the end of the day on the 17th and then a rally into a peak on the 18th. But either way, that peak on the 18th midday roughly is going to have a decline through multiple support levels. And then on the 19th, we rally into a key resistance, pretty notably around the cusp of the 19th, 20th. And it looks like we decline pretty notably from that resistance with consecutively lower spikes up on the way down into an important trough or low around the 20th, 21st. Decline on the 21st ends with a fast sudden move higher, and that move higher continues pushing the upper end of a range higher on the 22nd and taking us to a peak there towards the end of the day on the 22nd. I'm advised to not to chase that rally there. It's a brief peak that's easily missed with a decline through multiple support levels into the 23rd, or a brief peak on the 23rd, probably a brief peak on the 22nd and a decline into the 23rd through multiple supports. And it looks like we come back to that peak again around the 24th. That same peak from the 22nd we see again on the 24th, and then we have a decline that increases with the momentum moving forward out of that peak on the 24th midday. An unexpected move higher on the 25th, period of price swings and sideways behavior on the 26th, with another prominent trough on a 1 month scale around the cusp of the 25th, 26th. We have an unexpected move higher on the 27th, even in the face of seemingly overwhelmingly negative headwinds or overwhelmingly negative chart behavior. A notable move to the upside on the 28th with a lot of volatility, but a lot of price changes covered there. That move to the upside takes us to a key resistance, and then we decline. We have like a sideways fluctuating decline from that resistance on the 20th into another prominent trough midday on the 29th, and then there's this big move to the upside out of the trough midday on the 29th. As far as the highest highs and lowest lows, so there's a good chance we see a highest high here around the 6th, 7th, and then an even higher one, like the same or slightly higher one around the 9th, 10th. We might come back. There's a prominent peak there on the 15th. Hard to say where that price level is, but I don't think it's going to be higher than the high here on the 9th, 10th. Probably see the high like one more time here before a sharp drop into a lowest low here on the 20th, 21st, and then we revisit that lowest low probably on the 25th, 26th, maybe again on the 29th, hard to say. In the sneak preview for March, there'll be a period of volatility that ends with a fast sudden move higher. That's the highlight for March. Let me know what you think by hitting that like button. Please subscribe if you haven't done so. It really helps out the channel. Most importantly, make sure to follow that rule of karma. You know where to go. You know what to do. Blessings to all my angel investors. Stay tuned if you got the paid version. I'll see you guys on the next one. All right, so this is a tricky one, guys. Pretty difficult to kind of determine where we are. I'd say we're near lows on a multi-year scale. We're near these lows here. And then there should be this prominent move higher and a full retracement of that move back down in 2024. And we do see the lover's card there, cross reading congruency. I would probably be positioning myself for this price level of 74 cents that I have here marked off. Hard to say exactly where that's going to take place without looking more deeply into the 1 year. But as far as trades on the February reading, we're near highest highs at the beginning of the month. That's pretty solid as far as what we saw for the 1 month. And then we get into lowest lows here on the cusp of February, March, or there's lows for the month here towards the end, 2 of them, look at that. And then lowest lows on the cusp of February or into March. So I would be looking to get into long positions in the midst of these lows here, because we're going to revisit a crest here in the March high in the midst of erratic behavior back and forth through the same price level. In the month of February, I wouldn't be looking to open up long positions for this multi-year trade, just to be clear. I was just looking at it from that standpoint. So here around the 19th, 20th, after there should be a sharp drop off of a peak here on the 19th, 20th. That's where I would open up a partial long position, and then I would add to that long position when we revisit lows around the 25th, 26th. And this would be a long position for a multi-day swing trade, like into the revisiting of that price level there in March, and the revisiting of the highs from early February, sometime in March. All right, so there's a pretty good trade here on the 7th, 8th. All right, we have this highest high thus far on the 6th, 7th. It's a peak that we sell off from pretty notably on a multi-day scale. That decline takes us into the 8th, but that decline on the 8th, it'll turn into we'll hit an important range, and then we'll have like a turnaround where we go from the bottom of a range all the way to the top of a range, taking us into a high, like the same high, or probably a higher one, probably the same high actually. So what I would do is in the midst of the decline here from the 7th into the 8th, and before a big move from the bottom of the range all the way into the high again, I would open up a long position, and I would utilize the price level of the 6th, 7th high as my exit here around the 9th, 10th. So there should be a lower peak around the cusp of the 10th, 11th. With a decline off of that, I would use that decline as an opportunity to open up a long position and close that long position again when we revisit the same price level here as what we see here around the cusp of the 10th, 11th. We should see midday on the 12th. So on the 15th, in the midst of a notable rally, reaching for distant resistance on a 1 day chart anyways, a notable rally on 1 month, reaching for distant resistance on 1 day, open up a partial short, maybe add to that short on the 16th if there's an opportunity, like a better price level opportunity. Same deal on the 18th, I'd add to that short, but I'd be looking to close that short when we have a sharp drop. There's a unicursal hexagram on the 15th, but I think the drop probably is a little bit further out around the 18th, 19th, 20th into a low around the 20th, 21st. But wherever that sharp drop is, that's where I would exit. Also, where that sharp drop is where I would open up a partial long for a multi-month swing trade into the following month. There's a peak around the cusp of the 19th, 20th. I would utilize that. That's probably the same high that we had from like the 9th, 10th. I would utilize that as an opportunity to open up a short for an overnight trade into a lowest low around the 20th, 21st. Close out of it at the lowest low there. You might also get another opportunity in the last day of the month to open up a long position. I would do so at a trough if we see the same lows as the 25th, 26th. On the 29th, I would add to the long position for the multi-month swing trade into the following month. But it's probably going to be before a big move higher midday there on the 29th. And those are the best trades. So this very likely this is like a new high here in early February, like where we see this abundance card. This is probably a new high in like a 1-year chart scale minimum, and probably on a like a new local high on a multi-year chart. As far as the overall performance of Dogecoin in comparison to Bitcoin throughout the same period of February 2024, looks like Dogecoin outperforms Bitcoin in February 2024. And that's the paid version. Thank you so much for supporting the channel. You know where to go. You know what to do. Blessings to all my angel investors. I'll see you guys on the next one.